We're bringing Scott St. Clair on because we've done a big change here at IBD. We have switched from MarketSmith to MarketSurge, and as Arusha mentioned, MarketSmith is something that is actually we were licensing from the O'Neill company, and when we got bought out by the News Corp, Dow Jones, we basically we had a time limit where we're going to have to give that back. So Arusha is taking control of MarketSmith, but we have MarketSurge, and we're going to go through some of the things. But in terms of new features, what's one of your favorites?
Well, for me, hands down, it's the earnings line. You know, adding this earnings line to the weekly chart was something that we've always wanted ever since. I used to go to seminars and listen to Bill and David Ryan, and Bill would mark on the chart where the earnings line was and where the earnings might accelerate, obviously in a positive standpoint, or decelerate. And everyone would say, "How do I get those on my chart?" And of course, you couldn't, at least not as a quote unquote retail investor. So that was the biggest add for me. Is I really like having this visual of the earnings across the chart.
For those of you that are watching, you can see this green line, and it looks pretty steady. It's not like a relative strength line that's kind of jagged all over the place, or even the price bars. It's a pretty steady line, and you can see some hash marks. So describe what these hash marks are.
So each hash mark represents in this case, NVIDIA is reporting their earnings. So on that hash mark, you can see on November 21st of last year, NVIDIA reported $4.02, which was a 593% increase from the previous report a year ago. So that's what each of those hash marks represent. The line, now, of course, NVIDIA would finish their quarter a handful of weeks before they would announce, right? Give themselves a chance to put it all together. It's probably a lot quicker than it used to be, but I imagine in the old days, that's why we have this window where, the quarter would end and there'd be like, 8 weeks before they would report. But see, that's this marking where the line turned, in essence, was where the quarter ended for NVIDIA. So currently we're just marking the hash mark on the chart where the numbers were reported. That way you can see what's most important. How did the stock react to that earnings report? Was there any kind of change in the price action?
So Scott, for the current quarter though, so NVIDIA reported on February 21st. What's any specific reason why they don't have the hash mark, or the line hasn't extended out to show it at that point?
Yeah, a couple of reasons. We would need the next quarter to have that hash for the report, but it is built into the calculation. So this kind of slope or of the line is taken into account that most recent quarter of 486%, which you can see down here. And speaking of future upgrades, we need the real estate here for the estimate. So we are going to build out the estimate. So the estimate for the next quarter, that's roughly, 459 or whatever that might be. So, and it's in the works, so don't hold me to it, but maybe there'd be a dashed orange line, which would represent what Wall Street thinks the earnings would be. And if they came exactly in line, this is what the earnings line will look like based on that new report.
And so again, just to be clear, the line is stopped at the last, because the last report that came out was through, through that December quarter, or actually it's a January. Their quarter ends in January. So you can see that the line stops in January. In this case, a lot of them you're going to see maybe stop in December, but this one stops in January because that was when the last reported quarter ended. So the line does go through that snapshot in time of when the earnings report came out, even though the report itself came out a few weeks later. So also you mentioned the estimates, and since we're kind of talking about it, maybe you could talk a little bit about how this fundamental block has been changed a little bit.
Yeah, so we have added the 4 quarters of quarterly earnings and estimates via FactSet. They're the data provider for those estimates. And because we didn't want to really get rid of any data points, we added a scroll bar. So if you'd use MarketSmith versus MarketSurge, you can see there's a scroll bar here where I'll have to go down if I want to see the next 4 quarters of earnings and estimates. And obviously the EST is implying that, that's the April quarter, $5.08, which would be up 459% from the previous year's quarter, right? So we still doing it the old school Bill O'Neill way, not consecutive quarters, but year over year.
Right. And how often do you use estimates yourself when you're doing analysis? Bill was always like, it was one of those things where he would look at them, but he kind of would take it with a grain of salt. Like, the reported estimates, that's kind of factual, that's out there, not opinion. Where do you kind of fall in terms of estimates?
Yeah, I'm a little old school. I fall more on the side of Bill O'Neill. I don't really look at the estimates. I understand that, the estimates are out there. So Wall Street and hedge funds and mutual funds, they probably are making decisions based on those estimates. But for me, an estimate is a guesstimate, right? It's the best guess. And especially nowadays with, the Reg FD, and it's just they just don't get the guidance from the companies like they might have 20 years ago. So I would guess, I've never been an analyst, but I would guess it's pretty tough to, what is NVIDIA, a massive leading chip company, going to do, 3 quarters from now? So, I keep that in mind, but it's nice to see. And I know that other people like to use it. And therefore, if other people are using it, maybe, it's like technical analysis. Some people will say, I don't use it, but if you go to their office, I've read so many stories of, people say, oh, Stanley Druckenmiller, he doesn't use technical analysis. And then you go to his office and some guy, I was just listening to a podcast of a guy that worked at Soros. And he said, oh, they have chart books everywhere, right? And just, so it's like, I'm not using it, but my competitors are using it. Therefore, I want to know what they're thinking,
what they're looking at. Yeah,
exactly. So that's kind of how I think about the estimates. I want to know what Wall Street thinks. And you can see it's like a significant deceleration, now from an incredible, record-breaking level for the size of a company like NVIDIA. But you fast forward 2-3 quarters from now, and it should be very, very interesting how NVIDIA continues its ascent or lack thereof. If this is true, to me, it would probably create some type of window where you might not, you'd probably want to be a seller or a trimmer, depending on your style of NVIDIA, into this strength.
Mm-hmm. And we're using this NVIDIA chart as our sample case, but I should disclose that I do have a position in this myself.
Well, as do I.
Yeah, so I forgot, because it was just a sample and I wasn't even thinking about the chart itself or the stock itself. But if you could also scroll up a little bit, Scott, this is a minor thing, but we also kind of do, we added the percent change for the annual. We always kind of had that, those annual EPS numbers, the raw numbers, if you will, but we did add that percentage change just so you can kind of see where things are. That might kind of give you a better sense of where that EPS growth rate comes from, that 45%, because then you can see, oh, okay, I'm seeing how it got there, and kind of makes that earning stability also kind of make a little bit more sense.
Scott, there was another interesting thing that you showed me earlier about on the earnings line, where there was an arrow pointing up and an arrow pointing down. And I asked you, I was like, what is that? What's the significance? Why don't you walk through for those kind of situations?
Yeah. So these are the arrows that Arusha's referring to. This black arrow is implying that the earnings for Alpha Metallurgical, or AMR, are much easier, turned down at that point. Now, each hash mark is not. It's a combination. It's a combination of all the previous trailing 4 quarters.
Right.
So
otherwise the line would be all over the place.
Yeah, and we played with this. What's the best way to do this? The earnings line is a best fit. So you don't want to read too much into like, oh, the earnings are way above the price. I know Bill would say that sometimes, or the earnings are way below the price. It is a best fit. So really the value add is in the visual representation of how that line is moving. Otherwise, yeah, like Justin said, it would look like this. It would just be bananas, and so we do this is the last 4 quarters trailing, and this number is the last 4 quarters trailing, and so on and so forth. So because you can't see the price action for AMR, I don't know if this is the best example, but that's what happened. The trailing 4 quarters turned negative. Okay. We didn't want to turn the line off because like Viking Therapeutics, this is, I ran into this. It's like, well, there's an earnings line, but they're not, where are the earnings, right? So it came down to, okay, well then somebody might pull up Viking Therapeutics and think, oh, how come my earnings line isn't working, right? So it's trying to figure out the best way for the customer to experience and use this. So we don't want to turn it off. So but you want to know, like, at this point, the trailing 4 quarters are negative. There are no earnings. And then the green arrow represents the trailing 4 quarters, in this case, where it actually turned positive.